Housing shortages and skyrocketing rental prices are leaving millions around the world struggling to find a place to call home. From major urban centers to smaller rural communities, the lack of affordable housing is a growing challenge that transcends borders and socioeconomic divides. In this video, we'll examine the housing affordability crisis that has rocked the world and whether it is a good thing. Also, we'll take a look at possible solutions that suits everyone. The history of housing markets is as diverse as the world itself, with each country and region experiencing unique challenges and successes. However, the common thread is that throughout history, the availability of affordable housing has remained a pressing concern. As urbanization increased rapidly during the Industrial Revolution, cities saw a surge in demand for housing, leading to overcrowded and unsanitary living conditions. Fast forward to today, and the world continues to grapple with the consequences of inadequate and unaffordable housing options. The accommodation crisis has far-reaching effects on people's lives. For many, the inability to secure affordable housing means having to make difficult choices between paying rent and meeting basic needs like food, healthcare, and education. Families are often forced to live in cramped, substandard conditions or face homelessness. The stress and anxiety associated with housing instability can take a significant toll on mental health, and children growing up in such environments are at a higher risk of experiencing developmental and educational challenges. The lack of affordable housing has led to increased social segregation, as people with lower incomes are pushed out of their neighborhoods due to rising housing costs. This displacement can result in the loss of social support networks, making it even more challenging for individuals and families to overcome the hardships they face. Then came the COVID-19 pandemic to make it all worse. With job losses and economic downturns across the world, many people have found themselves unable to keep up with rent or mortgage payments, leading to a surge in evictions and homelessness. The pandemic has also highlighted the importance of safe and secure housing as a critical aspect of public health, as those without stable homes have been disproportionately affected by the virus and its economic consequences. Before we delve into the details of the housing affordability crisis, it's essential to examine the factors that drove up house prices beforehand. One of the primary factors was the increasing demand for housing, driven by population growth and rapid urbanization. As more people moved to cities in search of better job opportunities and quality of life, the demand for housing in urban centers rose. This surge in demand, coupled with a limited supply of housing, contributed to the escalation of house prices. Another significant factor was the low interest rate environment that persisted for years leading up to the pandemic. Low interest rates made borrowing more accessible and attractive, spurring a rise in mortgage lending and fueling demand for real estate. This, in turn, contributed to higher house prices, as buyers were willing to pay more due to the affordable borrowing costs. Investment in real estate also played a role in driving up house prices. With stock markets experiencing periods of volatility and low interest rates limiting returns on other investments, many investors turned to real estate as a means of securing long-term, stable returns. This influx of investment capital, both domestic and international, further drove up housing prices and made it more difficult for first-time home buyers to enter the market. In some areas, government policies and regulations inadvertently contributed to the rise in house prices. Lengthy permit processes, zoning restrictions, and development fees can limit the construction of new housing, creating a bottleneck in supply that drives up prices. Additionally, policies that incentivize homeownership, such as mortgage interest tax deductions, can fuel demand and contribute to higher house prices. Lastly, the phenomenon of gentrification played a role in escalating house prices in certain neighborhoods. As more affluent residents moved into traditionally working-class areas, property values rose, displacing long-term residents and making it increasingly difficult for lower-income individuals and families to find affordable housing. So, what factors drove up house prices during and after the pandemic? Several interrelated factors played a role in driving up the cost of housing during this unprecedented period. One key factor was the historically low interest rates implemented by central banks worldwide in an effort to stabilize economies and encourage borrowing. These low rates made mortgages more affordable, increasing the demand for housing and consequently driving up prices. At the same time, many people who were fortunate enough to maintain stable employment during the pandemic found themselves with additional savings, as opportunities for spending on travel, dining, and entertainment were limited. This extra cash allowed more people to enter the housing market, further increasing demand and contributing to rising prices. Also, the pandemic prompted a shift in housing preferences, as people spent more time at home and remote work became more prevalent. Many individuals and families began seeking larger homes with outdoor spaces, home offices, and room for home-based activities like exercise and hobbies. This change in preferences led to increased competition for properties that met these criteria, causing prices for such homes to soar. Another contributing factor was the constrained housing supply during the pandemic. Construction projects faced delays and even came to a halt due to lockdowns, labor shortages, and supply chain disruptions. With fewer new homes being built, the limited supply struggled to keep up with the rising demand, resulting in higher prices. The surge in house prices can be viewed as both a positive and negative development, depending on the perspective and circumstances of those involved. On one hand, rising house prices can be beneficial for existing homeowners, as it increases their home equity and overall net worth. This can provide financial security, allowing homeowners to leverage their increased equity for investment opportunities or to finance home improvements. Additionally, growth in property values can benefit local governments, as higher property taxes contribute to increased revenue for public services and infrastructure improvements. However, the negative aspects of house price growth cannot be ignored. Rapid increases in property prices can create affordability issues for first-time home buyers and those with lower incomes who may find themselves priced out of the market. This can lead to increased rental demand, driving up rent prices and exacerbating the housing crisis for many who are already struggling to find affordable accommodation. Moreover, significant price growth can contribute to wealth inequality, as homeowners benefit from the increase in property values, while those who are unable to purchase a home are left behind. This can deepen social divides and create long-term economic consequences for those who are unable to access the financial benefits of homeownership. What could be the ideal solution to address the housing crisis, and is it possible to achieve a market outcome that benefits everyone? Addressing the housing crisis requires a comprehensive, multifaceted approach that considers the needs of various stakeholders and aims to create a more equitable housing market. While it may be challenging to achieve a market outcome that benefits everyone, there are several strategies that could alleviate the crisis and promote more equitable housing opportunities. Firstly, increasing the supply of affordable housing is essential. This can be accomplished through a combination of public and private sector efforts. Governments can incentivize developers to construct affordable housing units through tax breaks, subsidies, and land use policies. Public-private partnerships can also be established to promote the development of mixed-income communities, blending affordable and market-rate housing to foster more diverse and inclusive neighborhoods. Implementing rent control and stabilization policies can help protect tenants from excessive rent increases and ensure that rental prices remain accessible. These policies should be carefully designed to balance the interests of landlords and tenants, allowing for reasonable rent growth while preventing displacement and housing instability. Also, providing financial assistance to low-income individuals and families can help bridge the affordability gap. Programs such as housing vouchers, down payment assistance, and subsidized mortgages can help make homeownership and rental housing more accessible to those who may otherwise be priced out of the market. Furthermore, investing in public transportation infrastructure can help address the housing crisis by expanding access to affordable housing options in suburban and rural areas. Improved public transit can make it easier for people to live farther from urban centers without sacrificing access to job opportunities and essential services. Addressing income inequality and promoting economic growth can help to alleviate the housing crisis indirectly. By ensuring that more people have access to well-paying jobs and a stable income, the affordability of housing becomes a more manageable issue for a larger segment of the population. While it may not be possible to achieve a market outcome that benefits everyone entirely, implementing a combination of these strategies can significantly improve housing affordability and accessibility, ultimately fostering a more inclusive and equitable housing market. There you have it. By taking a holistic approach that considers the needs of various stakeholders, policymakers and industry leaders can work together to create lasting solutions to the housing crisis.